Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Tuesday, January 13, 2009. The Japanese economy released data today showing that the current account surplus shrank almost 65% on the year as a result of falling exports. Corporate bankruptcies rose to a record high, and Japanese bank lending climbed to a record as companies are unable to issue corporate bonds to raise cash in the money markets. The combination of news sent the Nikkei 225 down almost 4.5%, increasing risk aversion in the Asian session. The Aussie yen pair, always sensitive to carry trade sentiments, fell again today, the fifth session in a row it has done so. Today's fall amounted to 170 pips, bringing the pair to the 59 level, the lowest it's been in about a month. The yen also advanced against the euro and pound. Turning to the UK, we see more poor news out of the economy. The BRC Retail Sales Monitor, which measures the annual pace of sales, was down 3.3% in December. That's the worst December since records began 14 years ago. Next, the trade in goods balance widened sharply in November, increasing to £8.3 billion, following a deficit of £7.7 billion in October. That is the largest deficit since records began all the way back in 1697. Exports were down 6%, reflecting the weakness in global trade. In another release, the Conference Board Leading Index was down 1% in November, following a 1.7% drop in October. In two housing sector releases from the UK, the RICS house price balance showed that the net balance of surveyors reporting falling rather than rising prices improved from 75.8 to 73.5. This is the least negative level since last February. However, houses that are seeing price declines are seeing an acceleration of those declines. On the year, a government measure showed prices down 8.6% in November compared to a year ago. The weak sales and trade news pressured the pound, which extended its losses against the dollar that started in yesterday's session. The pound-dollar pair slid 340 pips today and is now more than 800 pips off resistance at 1.5350 set on Friday. This week's decline has now completely cut down the gains seen last week in the pair. The pound also had a second day of losses against the euro. In Germany, wholesale prices fell by 3.3% on the year in December, the sharpest drop recorded since records began in March of 1999. On the month, prices retreated 3%, following a drop of 3.3% in November. The reduction in prices can help spur spending by consumers, as was recently seen in retail sales figures from Germany and the EU, and also gives the ECB more leeway in cutting interest rates to try and spur the economy. In the US, the trade deficit contracted by the most in 12 years during November, as the month saw oil prices tumble in response to the widening global slowdown. The deficit narrowed to $40.4 billion, a much smaller amount than predicted by economists. Imports were down a record 12% compared to a drop of 5.8% in exports. The fact that the drop in imports outpaced exports helped trim the deficit. The euro-dollar pair fell in favor of the greenback today for the third straight session, as the better-than-expected U.S. trade data mixed with a sense of traders seeking some safe haven among the deepening global recession. The pair fell below 1.32 for the first time in 4 weeks. In a speech today, Bernanke said a fiscal stimulus plan alone will not be able to bring the U.S. economy out of recession. He called on the government to buy or guarantee banks' tainted assets as a way to stabilize and strengthen the financial system. A victim of the deepening global recession fears was the Kiwi. In a look at the U.S. dollar-New Zealand dollar pair, we see a steep 250 pip drop in today's session, which brought the pair back to levels seen back in December. Weak global growth will impact demand for commodities, thereby adversely affecting commodity currencies like the Aussie and Kiwi. In a final fundamental release today, Canada's trade surplus shrank to 1.3 billion Canadian dollars in November from a downwardly revised 2.3 billion in October. Exports slid for the fourth month in a row, dropping 6.8%. Exports to the U.S. were down by an even larger amount. The U.S. dollar-Canadian dollar pair rose to 1.2330 in today's trading, which comes close to running up against resistance seen throughout late December, and is also the culmination of a more than 500 pip rise in the last 3 sessions. Taking a look at our upcoming releases, we see building approvals data from New Zealand and home loans from Australia. Overnight, Japan posts its machinery tool orders, and the Eurozone releases data on industrial production. Tomorrow, the U.S. will release data on retail sales, import prices, and business inventories. And that wraps up our broadcast for today. Thank you for joining us here at cmsfx.com, and happy trading.